Hello, it's Brad Laurie of BlockchainBrad, and speaking from BlockVera, which is all about truth, trust, and transparency, we have the COO of CoinGecko here. His name is Bobby Ong. Thank you very much for being with us today.
Hi, Brad. Very glad to be on the show.
Likewise. Now, for all of those who are wondering, in the name of transparency, this is entirely free. This is not sponsored. This is educationally centered. It's all about trying to find out what CoinGecko stands for, and Bobby's here to explain all of that as the COO. So thank you once again, mate. Now, I wanted to ask you firstly, CoinGecko, what is it? What does it stand for? And what essentially is it all about?
Sure. So CoinGecko is a cryptocurrency data aggregator. What we do is we basically aggregate information in the crypto space. So we track everything to do with the price, market cap, trading volume, and other data such as developer social media stats for Bitcoin, Ethereum, and 5,700 other tokens. And
wow,
we use
5,700 tokens.
That's right. We have one of the most comprehensive database in the ecosystem. We've been running this since 2014. It's over 5 years now in the space. So we track data surrounding the coin. And lately, all this data comes from a lot of exchanges. So we are plugged into 370 exchanges, and we sort of rank exchanges these days as well. So that's pretty much what we do. We track coins, we track exchanges, and then put them in an easy to digest manner for people to understand the crypto market.
Got it. So you're a one-stop aggregation shop, really, for all of the different coins. Now, you mentioned an important word there, Bobby, and that is data itself, or data. Many people are now suggesting throughout the world that data is the new gold in terms of value, very valuable asset, certainly in crypto. Now, how can we trust the data that you put forward in this aggregation of information as an aggregator itself, as a platform? How can we trust that the data is accurate, that it is trustable, or more importantly, that we know that it correlates with each of the startups in real time?
Yeah, sure. So I think there's a few different data points, and a lot of data that we get, that we display on CoinGecko, comes from the source themselves. So let's just break down some of the data that we have, and we can see how they are clean or trusted or disputed, can be disputed. So I guess in terms of coins, everyone's really obsessed with the coin's market cap, and the coin's market cap is basically calculated as the volume weighted average price multiplied by the circulating supply. The volume weighted average price is relatively straightforward. The price, you just take the price from where it's all traded everywhere, this coin, and then you count the volume weighted average. So that's pretty easy to count. The part that is more subjective is the circulating supply. A lot of people think that supply is kind of a fixed thing, like just like how market cap is calculated for equities, where the number of shares in circulation is fixed, it's not disputed by anyone. I think in crypto, supply numbers, it's a bit of an art. There's no right and wrong answer. Everyone's got their own definition of what circulating supply is. Because let's give you an example. So like, for example, tokens that are held by a coin foundation may or may not be included in the supply. It will be included into the supply, but it should not be included in the circulating supply. And then all this supply held by the team and by the company, and it has a vesting schedule. So what goes in and what goes out is always a question of subjectivity.
So Bobby, this is so interesting. So basically there's a strong element of subjectivity even in working out what the circ supply is, because there's no regulatory clarification of how it all has to be deemed and articulated on the platform with data to back it.
That's right. And the reason why it's so difficult to count this is because every single coin has its own distribution supply schedule. Like Bitcoin is distributed to miners, and this is pretty straightforward for Bitcoin, but you can compare to some other coins, like a proof of work coin that has a pre-mine to the initial miner, or an insta mine, and then you compare that to an ICO coin where 50% of the coins are held by the foundation, 20% to the team, and it starts becoming very complex for many other when you start tracking in many tokens. So what we do is we try to be as transparent as we can. Every time we try to calculate the circulating supply number, there's a question mark icon on CoinGecko where you can click on it and you can see like roughly how we calculate, or where the source that we use to obtain this number. So it becomes more transparent, And I would suggest that anybody to go out and really don't trust everything that you see online, and to really, if you're really interested, and to really dive deep into the numbers to see what makes sense and make any necessary adjustment that you want to do to your own analysis. That's for supply and the market cap. If you look at the exchanges side, there's a lot of data that is given by the exchange. The big one being the trading volume for the exchange. I think trading volume for exchange has been pretty much been manipulated by many of these new exchanges, especially this Asian Chinese exchanges, and these numbers are no longer good to be trusted, I would say.
So, I'm so glad we're talking about this, because many of the experts who assess this kind of stuff when it comes to exchange data in trade volumes are suggesting that the large majority of them are actually fake volume.
That's right.
Even with some of the most reputable exchanges, arguably. So, obviously that's a really genuine concern for you as a platform that's reporting on, the volume through the data that you provide.
Yeah, completely agree. I mean, so in traditional markets, like trading volume is quite a good reflection of how large an exchange is and how liquid an exchange is. But in crypto markets, people are all these exchanges are so obsessed with manipulating the numbers to be big, and so that they can go around claiming that they're the largest exchange in the world. But I think we at CoinGecko have taken a view that these numbers have been manipulated so badly that they can't be used at all to determine if an exchange is large or not. And we have to use alternative metrics to measure cryptocurrency exchanges. Just to give you an example, so we all know that Binance is the largest exchange in the world. Right. It has most number of visitors. But if you look at the reported trading volume, if you sort exchanges by reported trading volume, Binance is only probably the 14th largest exchange in the world.
Okay.
Which is kind of ridiculous. So number 1 and number 13 is doing all sort of funny things.
So can you talk us through that analysis? Like, how did you make that deduction of 13 in terms of real volume? I'd love to know more about the process that you go through to determine what has real volume, what doesn't.
So we don't know. I mean, it's a bit hard, but what we do is we take all this reported volume that the exchange give, and we sort them, and we found that Binance is not number 1. And what we found was this was analysis done about couple of weeks ago. BitMax, MAX,
yes,
is the largest exchange by trading volume. So Binance reported about, this is I think like 1st August or so data. Binance reported about $1 billion in trading volume, but BitMax, MAX, has like $12.5 billion in trading volume, which is kind of ridiculous. It has 13 times more liquidity than Binance. This is because a lot of exchanges are doing trans-fee mining. They have zero-fee trading incentive. They have wash trading, and they have some of them are outright faking the API data.
Right. So given this is a really big problem, and clearly you're being bold enough to name some of these names, and we can really I want to discuss this as much as you're willing to go to, but does it concern you, Bobby, that this problem really puts the whole system potentially on eggshells, meaning that if the bedrock is already questionable in terms of real volumes, and we're being sold the narrative internationally that there is strength in the volume that we see, does it worry you that the realities of cryptocurrency volume is just not what is real, and it's not what we see on the front end?
I agree. There's no real numbers. The volume numbers are all not to be trusted at this point in time. Everyone's faking it. I guess a good indicator of how one can actually determine what a real number is to kind of use web traffic estimates, which is kind of what we do. So if you think of the narrative that an exchange that has that claims to be the largest exchange that has high volume should theoretically have more visitors, more traders on the website, and therefore more website visitors on their website. Therefore, third-party analytics platform like SimilarWeb should kind of show that this website will have a lot of visitors. That assuming all things are being equal, then you can kind of take that as a benchmark and normalize the volumes. And what we saw, a lot of these exchanges, although they claim that they have like a lot of trading volume, $1 billion, $2 billion, $10 billion trading volume, their web traffic just doesn't make up to it, just doesn't tally. And what this means is that a lot of these guys are probably outright faking their data.
Right. Okay. So let's talk about what you deem from your analysis and your teams as a very sort of successful exchange, one that has relatively authentic and provable volume, and even reports more accurately on what they do actually sort of essentially do. So what's the top, say, 3 or 4 that from your deductions stand out?
Yes, so based on our analysis, it would be like things, exchanges like Binance, Kraken, Bitfinex, Coinbase. These are the top exchanges, which we would expect to hear anyways, not some weird names which you never heard of before.
Okay, so given those prominent names, one of the things I did want to ask you is, already internationally, those names do stand out, and even some of the reports we've seen reflect much of what you're saying. But is there any possibility that there is still, wash trading happening at the highest levels? Any other things that, bots, for example, because being in the space for some time, there's always suggestions that even at the very top levels, there's questionable conduct potentially going on. Is there any way that you can check into that for us to know for sure that we're cleaning crypto up from the exchange sort of standpoint?
I think it's a bit hard to do that. So wash trading. So when you talk to the exchanges, I mean, a lot of them we say they don't do wash trading. So some of the exchanges outright conducts wash trading on their own. Some of them is done by the coins team. So for example, some exchanges, like, they may not have, they tell a coin you need to maintain a certain amount of liquidity to be on the exchange, and the coin teams feel pressure and they want to they hire a market maker, which is a bit of a not a very practical, not a very ethical market maker, which conducts wash trading on their behalf. So the exchange does not do the wash trading, but the coin team engages this market maker to conduct this wash trading. And it depends on exchanges system. Some exchange have more sophisticated system to track or to know that there's wash trading going on by the teams, in which case they can tell them to shut it off. Otherwise, some of them are just outright turning a blind eye.
Right. So in that sense, do you think that based on all the analysis, the best you've done to assess real volume as opposed to fake, and then make your deductions and even itemize the exchanges in that respect, do you think that even in that instance, it's very difficult, given what you're saying about third-party outsourcing, other ways in which some of these exchanges potentially can circumvent direct involvement in some of the more questionable conduct and do it through third parties? Do you think it's difficult because of that to really empirically show for sure what the volumes are to be true for each of the exchanges?
Yeah, I think to know it's really hard to know for sure which volume is real or not. Like, to really get to that, you probably have to go to the WebSocket and look at every single trade that happened and to sort of see if there's a matching order. It's just really hard and long process, but basically some of the ideas, some people are doing it, but we sort of use deductions on some other methods. So web traffic is one method that we use. We look at the order book for exchanges to kind of derive whether an exchange is sort of legitimate or not, or have liquidity or not. For example, like, if you think an exchange that claims to have over $1 billion in trading volume is supposedly very liquid, and you look at each order trading pair, let's say a trading pair Litecoin, Bitcoin, if the exchange claims that it has over $100 million in daily trading volume, you would expect the bid and ask spread to be pretty tight to each other and not a very fast, not very far off. But what we found was that I've seen exchanges where the bid and ask spread was 80%, even though there's over $100 million in trading volume, which is clearly ridiculous, because if you make one buy and make one sell, then you pretty much lose like 80% of your value.
Right.
And the same can be said, like, we look at order book depth. So if you think of the last done price, and then you take a 2% lower bound and 2% upper bound, and then you sum up every single order in the order book and take a total amount, and you can kind of get an estimate how much order is sitting in the order book within a 2% range. So let's just say that an exchange that is very liquid, we have over, let's say, $5 million in the order book depth. So that if you sell like $1 million, it doesn't even move the order book by 2%. But some exchange, for example, have like only $10,000 or $1,000 in the order book depth for 2%. So if you sell like one Bitcoin worth of coins, like $10,000 worth, you move the price by over 2%. So it's a good measure of slippage to see how much depth is there in a particular exchange. So obviously, an exchange that is liquid will have a very thick order book. An exchange that is illiquid will have a very thin order book. So yeah, these are some of the things that we can kind of use to derive whether the volumes that the exchange claims they have is correlated to the order book or not.
I see. And also one of the things that I've noticed with CoinGecko is that you do stand out among many of your peers with regard to the depths of transparency that you do go through, and also the depth of information you do provide. Can you just comment on that for a moment in comparison to or in the context of competitors? Now, we can't not mention entities like CoinMarketCap, for example. It's often the go-to for many. But what sets you apart, Bobby, and your team when it comes to the quality of your data aggregation?
Yeah, so I think when it comes to us, we try to collect as much data as we can in the crypto space, and we want to be transparent. We put all those information on our website. Obviously, sorting exchanges by reported trading volume is very bad because it incentivizes a lot of bad behavior from the exchanges, and this is part of the reason why there's all these fake volume issues surrounding the exchanges. So now we use a blended algorithm, which is very harder for the exchange to game, so that any user that comes to a CoinGecko will have to see a list of exchanges, and then they will be referred to exchanges that are more reputable compared to one of those that are more dodgy in this case.
I see.
Yeah.
So have you found that there's been a strong reaction in the space, whether it be a positive or a negative? Because obviously this is a speculative environment, so many people get very emotional when they start to see changes like this made. How's it been as the COO of the company, CoinGecko? Has it been a positive reaction?
Yeah, I think generally everyone's really very happy that we are making this change to the website and putting in more transparency. Basically, any initiative that combats fake volume is pretty much celebrated in this industry, because everyone knows that this is a big problem, and they're very happy that we are taking steps to clean things up. Obviously, some exchanges are not happy with some of the measures that we put in place, and I received calls from the exchanges saying that, why are you doing all these things? We're obviously like a big legit exchange with like fake with real wallets, and they're complaining to me. And some of the exchanges are pretty shameless, and they just tell me straight out like, it's part of business. We have to wash trade to make it appear that it's big. But like, that's exactly the point why we have to
right.
this issue. It's because of people like you that
right. So you're part of cleaning up crypto, Bobby, without trying to FOMO in or to try and suggest that, I'm incentivized in some way to say that I'm not. But what I like about what you're saying is that you're forward about the imperative of being more transparent and putting more truth into this narrative of data aggregation for those of us who are consumers of crypto.
That's right. Well said. Yeah.
Right.
I mean, we have a responsibility as one of the largest crypto data aggregator. Like, a lot of people rely on our site, and at one point we just can't stand like sending users to like some shady exchanges who are outright clearly like faking their trading volume and to appear at the top of CoinGecko. So we have to changes.
Now, one of the things I really wanted to ask, and I think you could answer this, very few can, is that when we look at the outcomes, like today, for example, when we see the performance of alternative startups performing relatively well, often we see this anomalous correlation. We see a full green run or a full red line, of movement. Can you talk to me a bit about why that tends to happen or has happened historically? Because it doesn't seem to fit with your traditional models of market movement, where there's this overt correlation between many of them. And if you notice that, can you tell us a bit more about why it's happened?
I don't think I understand your question particularly well. So the crypto markets like Bitcoin and the alts are not moving in tandem with each other?
Well, sometimes they have in the past. So it's more of because of your experience with all the data aggregation. It's really trying to understand why we see those green candles move in sync, and especially in the past when it comes to all different startups, whether they be Bitcoin and all others, or whether that be Ethereum and many others. We've seen a very anomalous sort of market movement sort of play a phenomenon play out, where it hasn't really necessarily always been apparent why that took place, but certainly it didn't seem to be that individual startups were making moves, and like you'd see in traditional IPO models where they would advance in some way, or they'd make announcements of some of the things they're doing. This was just more a pattern that we saw across the board as one more uniform movement, where the needle moved and the green followed or the red followed in that respect. I
think traditionally alts have always followed Bitcoin. Whenever Bitcoin go up, at some point, alts will go up at some point. But I think, and then vice versa, when Bitcoin goes down, a couple of days later, alts will start going down as well. And unfortunately, I think this year the run up has just purely been Bitcoin. Since April 1st or so, like second quarter this year, things started picking up, and then the price has been sustaining relatively well above $10,000. But the alts like Ethereum and the rest have not really followed through and has not performed as well this year. It's hard to say. There's a lot of factors in play, and this is a dynamic market. Things change all the time. Like it's hard to say. I mean, earlier this year as well, a lot of people we saw a run up in the exchange token because of the IEO phenomena. But I think exchange tokens have taken a hit lately. Some people are saying that's kind of the end of the IEO trend, but let's see. I mean, Coinbase is looking to get into IEO. Binance Band protocol seems to be doing okay as well. So it's hard to say. I mean, why the rest are not moving in tandem with Bitcoin? It's a bit tough. There may be other factors in play that we may not be aware of actually at this point in time.
Right. Well, let's talk about that in the context of trust, because we talk about trustless systems, but confidence with regard to trust is relatively low in some areas, and one of them is in the IEO for sure. And that's simply because we've seen the propensity for even locked up scenarios and certain parties, whether they be market makers, whether they be exchanges, we're not really sure who, but there's certain actors in this space that are capitalizing on even the investors now. So many people rightly are in the space suggesting that perhaps, you know, the mechanism or the architecture that is the IEO is failing because it's not really designed to support what it purports to do. You know, and in that respect, from your experience, do you think that we need to see more transparency in the way in which startups do list? Because obviously the IEO is a mechanism. It's not the startup itself, nor is an ICO. So do we need to redress these means of listing so that things are even more fair, even more transparent?
I think for the IEO method, I think it's relatively fair, but it's just a matter of I mean, Binance at least goes through the lottery system for you to win through an IEO ticket. But I guess for the projects who conduct IEOs and ICO, like there's a need for these guys to be transparent. Like if you don't want to be transparent with your startup or your project, like don't bother doing an ICO and IEO, because once you do an ICO and IEO, you have a token, you have obligations to token holders to sort of explain the things that you will do, whether you take a certain direction or the other direction. Of course, it may not be obligated. You may not be the team may not be obligated by law, but there is still a certain sense of responsibility to the token holders. I guess the good times of like raising like tens of millions of dollars while ICO is over. That's probably a once in a lifetime opportunity back in 2017, 2018, and where people raised 20, 30, $50 million. I think these days, if you raise like 5 to 10 million, like $5 million in IEO, that's considered very good. A lot of exchanges are looking at IEO as a form of a marketing opportunity for the startups. And they are pitching projects to get listed on their IEO platform as a way to reach out to their millions of users on their platform. So it's actually not very cheap to get listed as an IEO, but they're using it as they're pitching project as a marketing channel to reach out and promote their project. But I think the market's relatively soft. A lot of exchanges have been approaching me asking for project referrals for listings. During boom time, like exchanges will have enough projects on their site, their BD teams will be kept busy and they don't have to approach like third party to ask for referrals. So things are relatively slow, I would say, at this point in time.
Right. So obviously, and the narrative seems to be changing now to be a more tech-centric sort of ecosystem. Now, obviously, given that there are so many, as you mentioned, more than 5,700 startups in the whole list, how do you go through the process of, you know, assessing, or do you even get involved? Are you entirely impartial and neutral in what does onboard onto the CoinGecko platform?
So we have a set of criteria, and the token teams are free to fill up a form on our side, and if the team will go through the list of checks. If it fulfills our criteria, add them onto the CoinGecko. Obviously, if it's a proven scam, like we will not add it, or we will remove it if it's somehow on the site. Yeah. So if it's a proven scam, I mean, scam is a relatively subjective word. Like scam in a definition is a project that has been acknowledged by a government's financial regulatory body as being a scam, I would say.
Right. I see. So there's other, perhaps more questionable, some questionable startups, but haven't got that title of scam. Yeah. But I want to also ask you about costs involved. Are there any fees that startups would incur, or is there any means in which you create revenue by having them on board onto the CoinGecko platform with their name attached to yours?
So at this point in time, like tokens are free to be added onto CoinGecko as long as it's traded on one of the 370 exchanges that we track. There's no fees involved, and that's what we plan to do to keep it that way for as long as we can. Okay, well that's great. So how do you sustain your own model? What's your business model? So we are purely advertising based at this point in time. We are one of the largest crypto websites, and I guess being one of the largest, we are able to sustain it through the advertising operations on our site. So that we've been lucky that way to be able to sustain operations via advertising, and that's the business model for this point in time. Okay, great. So how's it going so far with regard to, it seems quite positive. Are you making enough to grow the platform, improve the technology, or improve the interface? Yeah. I think it's been okay. Obviously, it's not as great as what it was in 2017 and 2018, but I think we are surviving. We are sustainable, definitely profitable. Not greatly, but it's good enough to keep the operations going, because it's crypto. It's very cyclical. Like things go up and go down all the time. So I think we have expected this situation to be in place. When 2017, when Bitcoin price hit $20,000, it reminds us a lot of the 2014 days when Bitcoin hit $1,000, and we knew that once you hit $1,000, there's going to be 3 years of like no growth or like decline in industry, which was 2015, 2016, and pretty much half of 2017. And we sort of expected when Bitcoin hit 20,000 at the start of 2018, January 2018, we knew that it's going to last like another 2.5 years of decline. Like it won't go to the moon forever. It must correct itself. So we were prudent with our cash, and we knew what we needed to do. We needed to keep the money for the long haul, for the winter months in crypto. I see. So obviously you're very much, one of the proponents for the long-term vision and potential of this ecosystem. But I wanted to ask you about the nature of the tokens for a moment. The majority, if not all, are deemed utility tokens, as I understand, that are listed on CoinGecko as part of the aggregation, at least. Are you concerned by that term? And I ask you this sincerely because, for the most part, if we listen to experts like Andreas Antonopoulos and many others, they suggest that many of the tokens themselves don't have provable, or valid use case yet. I like to use the term pre-utility, because at the very least, people are making a blockchain bet on the prospects of utility for those tokens. But at the point of listing, when they start on the exchanges, and obviously as part of the process for you, are you concerned at all that some of them just are completely nothing, that they're not a utility, they're just a mechanism to try and get funds out of people? Does it worry you at all about the terminology of utility token for many of these? Yeah, I mean, I think I like what you say about pre-utility tokens. I think a lot of people are doing that, in the sense that they are fundraising using token as a way to create a utility in the future through some sort of network usage. But during like fundraising, during exchange listing, there was no utility in this token. Yeah, I mean, at the end of the day, it's still worrying that all these guys need to prove themselves, and many of them don't succeed. That's not really part of what we do at CoinGecko. We don't really judge, we evaluate. I mean, we track the market data, like this token exists, it trades on certain exchange, there's price and there's volume data. Let's see what happens in the data. I see. So you're completely impartial with the terminological problem of whether things are securities, commodities, or utilities. So I understand that. Obviously, in the future, we're going to see more moves with regulation and regulatory bodies coming into crypto. Are you supportive of that? Are you pro-regulation? Generally, yes, I'm pro-regulation. I think they have, you've seen it firsthand, like some of these exchanges like doing fake volume, like, and it happens because there's no regulation in this space. Exchanges that are regulated, they don't wash trade as much. Their volumes are sort of normal and trustable, whereas those exchanges that are not regulated has all kind of weird stuff in the space. I think it's good for the average consumer in the space. It provides a good, like, especially for exchanges, it needs to be regulated because it holds a lot custody of users' funds. An exchange that can run away like tomorrow, that's very dangerous. So the government should regulate all these exchanges. It provides a good fiat on-ramp for users and a safe environment for them to trade crypto. But I think there's a fine line between a light touch regulation and a heavy-handed regulation. Like if you move a bit too much to tip it a little bit too hard, like it kind of stifles innovation. So the government's got to be really careful on what they regulate and what they choose not to regulate. So that's the tough part, and there's no right answer to this. Like it's an experiment throughout the world. Every country has its own regulation, their own laws, and it's quite interesting to see how things pan out. Like countries that have more light touch regulation have seen a huge growth in crypto startups and activity, whereas countries that have a very heavy-handed approach have not seen much innovation and projects going along.
Right. Now, in 2019, today, there's not a huge amount of empirical evidence that many yet have that utility, as you would know. So what are your thoughts on, the anomalous performance of things like Dogecoin, for example, where, it's known in the space for more of that comical experiment? It's not really meant to have finite use case in any instance. So do you think that for the most part right now, people use the narrative of store of value, but is it speculation actually that's driving much of this right now?
Yes, I agree. I think the whole crypto market is, at this point in time, is still very speculative in nature. I don't think a lot of people are using crypto as a way of payments, as a form of payments. Like most people, as a store of value, yes, but only for Bitcoin. I think people are using Bitcoin as a store of value to some extent as a hedge against larger macroeconomic forces. Maybe for people in certain countries like Venezuela, people are using it as a store of value against a depreciating currency. Definitely in China, against the depreciating yuan, people are using Bitcoin as a hedge. And some people in China are using a Bitcoin as a form as a way to skirt around capital controls in China as well. So that's
do you think, though, Bobby, that in that instance, sorry to interject, but it's just based on what you're saying, do you think that it's, again, a slight paradox or at least an anomaly that people are moving from one volatile asset to another in a hedge scenario, when in fact we've seen that we don't know exactly what the trajectory is of Bitcoin or any of these digital assets, either in the future, because it's still a very nascent environment right now. So what I'm saying is, for those who have the genuine need to try and move out of their own volatile currency scenario, do you think that moving from volatile to volatile makes sense?
I guess it's relative, right? I mean, if you're holding US dollar, Australian dollar, probably doesn't make sense to, US dollar and Australian dollar is relatively stable, but if you hold like the Venezuelan peso or like Zimbabwean dollar, like that it's going to depreciate for sure, and some people just want to move out some money into an alternative asset. And a lot of people and the way I look at Bitcoin is sort of a form of digital gold. So instead of holding gold, like wearing jewelry you just hold a digital form of it. Gold is relatively volatile as well, but not as volatile as Bitcoin, but some people use it to as a form of store of value. But if you look at the other currencies in the market, like I guess Ethereum has its own use case among the developers who wants to develop smart contracts and all. And an exchange token that I use as a form of as a trading fee discount and like some profit sharing on the exchange profit, and some people want it to have an IEO ticket. But a lot of other tokens, like as you pointed out, it's really hard to justify their utility or their lack of pre-utility, as you said.
Right.
So, yeah.
Are you bullish on the future of these starting to showcase their potential? Because you mentioned standouts like Ethereum and Bitcoin. And clearly that fits in the realm of also the decentralized global money in some respects, and also programmable and sound money for the future in different ways as well. But with the others, are you bullish on the potential for those to emerge with some proof of utility and functionality in their micro ecosystems as they build out their startups?
I think a lot of these coins, like, they are a form of experimentation. Like, not all will survive in the years to come, but every single coin has its own. If it does not survive, if it experiments on a new form of technology, it provides some insights onto how to design a token for the future. And I think we are still at a very nascent early stage of this industry. We can think of the industry like it was in 1996 in the internet days. Like, the Ubers and the Airbnbs and the Facebook have not been created in this space yet. And some of the things that will be designed, we cannot really imagine it now, and we can't really see it from the position that we are in. It's going to be hard trying to imagine what the future will be. And I think that's why it's really interesting. Obviously, I don't think that a lot of these tokens will survive, or a lot of them will die off, and new tokens will come out. But I think that's part of the interesting part of the industry. It's just like how internet startups, like, many of them die off, but many of them survive. The unfortunate part about this is, if you are an investor or speculator in this space and you invest in all these altcoins, you may not see a return. You may just see a lot of money lost in this space. If you invest in ICOs, if you didn't cash out early enough, like, a lot of this may have gone to waste. So that's the unfortunate part about this thing. Yeah.
So it's not for the faint-hearted. I mean, there's a lot of speculation and risk still built into this environment.
For sure. Very, very risky. You should not put, like, more than you did. I would say you only put in money that you're willing to lose in this space. Like, it's still so risky. You should not put your retirement funds in crypto. Like, that's definitely not the case.
I see. And do you think, given that we talk about speculation, do you think that the word gambling is not necessarily used enough? And I ask you this sincerely, because when we talk about gambling, we're still betting on a prospect. So whether it be a benign thing where we're betting on prospects of technological innovation, even at the very top echelons of blockchain thought, we still hear the common conversation and the argument put forward that even Bitcoin itself, if we're talking about, its white paper premise, where it's prospective global money, we're not yet there at that point. So are we still making the gambles, whether that be from a technological standpoint, whether that be an emotional, like, monetary based incentive, regardless of the reasons why people do put their money into it? Is it still relatively a gamble right now?
I guess you can say that. I mean, because of the nature of the industry is so high risk and so highly speculative, it's almost like a gamble. I guess nobody wants to use the word gambling because it suggests that it's based on luck. I guess to some extent, if you say if it's purely based on luck, it's not entirely based on luck. I mean, there is some form of analysis involved, but it is very highly speculative, as you pointed out, in this industry. Yeah.
You're right, and I apologize for pressing on that. It's only because we still see those coins, like I mentioned, the Dogecoin, having such success, when really, if it was all based on the fundamentals alone in the tech, you wouldn't see those unusual anomalies. So in the future, do you think we're going to see a less is more approach, where we see a reduction of many startups now and their respective tokens, and then an influx in more tech-centric, more provably valuable startups in the future?
I think it's just, we probably won't see a reduction. We probably see an increase in startups issuing tokens. If you think of a future where anything and everything that can be tokenized will be tokenized, I think we are still at a very early stage of this industry. So you see corporations issuing tokens on for all kinds of things. It can be utility token, it can be loyalty points on the blockchain. So I think we are still very early stage, and everything. Obviously, I hope it doesn't become like a big gambling den and casino where everything is speculated upon, but everything still has very high risk at this point in time. Hopefully, maybe in the future, when there's more people getting involved, it won't be as speculative and volatile.
Right. Now, obviously, you're very much aware of the liquidity issues with regard to comparisons to other mainstream markets. We're still very nascent, and even with Bitcoin, it's comparatively to other crypto startups, it has significant liquidity. It is the king in the crypto domain, but comparatively to the others, it's relatively small. Do you think that for it to emerge for the use case it purports or aims to have, does it need to have much more liquidity than it has now?
Oh yes, for sure. I think if you compare the crypto market with the traditional market, we are still really tiny. Even if you take the current inflated volume with all the exchanges taking the volume, it's still really small compared to the traditional markets. And the institutions are not even in yet. I mean, everyone's talking about the institutions coming into crypto. They're not in. Like, people hope they're in, but they're not in yet at this point in time. A lot of the groundwork, the infrastructure is being laid upon, especially with regards to custody, which is a prerequisite for many of these institutions. But we are nowhere near what the traditional markets needs, and it's considered very small for many of these fund managers. So I think it'll be interesting in the years to come. There's a lot of growth potential as things get fixed upon and improved upon. There'll be a lot of growth and the liquidity and things will get better. Not for all tokens though. Like, it'll be a very it's an 80-20 rule. So the big coins, you'll get a lot of all the liquidity, and then the other coins will be a struggle to get attention from the market. And also, I think coins like Bitcoin, Ethereum, those will do relatively well, and then the rest will be a struggle to see how they can bootstrap their liquidity further in the years to come.
Right. So overall, clearly you're bullish on blockchain, you're bullish on the technology. Do you also open up to other prospects outside of the utility token model, in that we see the narrative of STOs, for example, and other types perhaps we haven't even seen yet? Are you a very agnostic platform in that sense?
Yeah. I think securities tokens are very interesting. It opens up an opportunity. Actually, in fact, a lot of the utility tokens that have been issued in 2017 and 2018 should really be issued as a security token. Then it's very clear what they're really offering is basically a share in your company in essence, but they have to word it in a certain way such that it falls under the utility token concept. I think it's very interesting once jurisdiction governments legalize security token, like, company can start issuing tokens on the securities tokens on the blockchain, start selling them globally and all. I think it'll be very interesting. But I think it's just very risky as well if you think about it. Like, and governments want to protect the retail investors. If you think about startups, like 99% of all startups fail, and essentially these are early stage startups selling shares in the form of security tokens, and that's not going to end well for many people because these tokens will be worthless at 99% of them will be worthless at some point because these startups fail.
Right. And we also saw, as you mentioned with equity, many instances they really should have just been that. But the anomaly here is that often they had both. They offered equity to certain stakeholders, in the private accredited investor sphere, but then they also offered this, nebulous utility token in juxtaposition. So again, it raises the question of what that actual token is in the scenario or in the context of what you explained. So in the future, given your position as the data aggregation service that's provided for, the globe, are you bullish on the construction of the cryptocurrencies emerging for various verticals? I mean, are you bullish on the eco really prospering and blossoming into something that we haven't yet seen?
Yeah, I'm pretty bullish about it. I mean, we have to take a look, right? I mean, just 2 years ago, there wasn't a single exchange token, but now there's so many exchange tokens in the space, and every single exchange has their own token. It becomes like a de facto standard of issuing a token. Sort of transformed the entire crypto exchange industry. Binance Coin, KuCoin, Gate, they all Huobi token, they all have their own token. And I think a lot of things will be transformed as well in a different industry. We just don't know yet. But I think there are ideas in place. A lot of people are working very hard to come up with ideas. And it just takes one idea to get popular, and then you have a whole host of copycats replicating this model as well. So I'm generally very bullish. A lot of ideas I haven't seen it yet, but I'm looking forward to seeing all those ideas come to us at some point.
Got it. So what's the vision for CoinGecko? I've had a look at your interface, the way in which your website looks and how easy it is to use. Are you planning on doing upgrades, updates? Are you also paying attention to the feedback from the community on what they'd like to see in terms of tweaks for CoinGecko?
Yes, most definitely. So if there's anyone, we're always looking to improve. It's a continuous improvement process over here. If anyone's got suggestions on how we can further improve the website, we always welcome suggestions to our email or to our Telegram or Twitter. We just love hearing them because the industry moves really quickly, and we kind of have to stay updated on the changes. Otherwise, we fall behind the.
So it's 24/7 for you, Bobby.
That's right. That's right. I get messages midnight, weekends, and all. It's just a struggle trying to maintain a work-life balance. But that's the industry that we are in, and that's very interesting at the same time.
Absolutely. Well, I really thank you for your time today. It's been so enlightening to hear about your perspectives on the crypto environment more generally. Also, just on the need for transparent data aggregation as a service and as a platform or website for each of us to access. You know, at the end of the day, we do talk about trustlessness, but we also need to be able to trust information education. You represent information that we, participants of crypto are also looking towards to trust. You know, and you're letting us know you're doing the very best you can to provide accurate and updated information at all times. You also welcome the feedback from us, and we appreciate that. So, Bobby, thank you very much for your time. Is there anything you'd like to say as a final statement to really just capture the value of CoinGecko and what you fundamentally offer as, you know, your value prop for the community?
So yeah, we are a crypto aggregator. I think you should, if you ever want to check crypto prices, you should probably use CoinGecko and hope to see you around in our community.
Absolutely. Well, Bobby, as a COO of CoinGecko, thank you very much for your time. This was entirely free, and I really do appreciate that you've taken time out of your day to have a chat with me. So thanks, mate.
Pleasure. Thank you.